A new report from Capital Economics also notes that if President Trump moved to weaken the dollar amid escalation over the trade war, it would fail without support from the Federal Reserve. Brian, you've been looking into this, and I mentioned the Holy Trinity here because, the policy tools at the disposal when we talk about how you can help support the expansion, as we use Fed's terms around here. I mean, what are you looking at when President Trump is trying to make sure the economy doesn't falter going into his election in 2020?
Right. So you mentioned the Holy Trinity. It's this concept in international finance that no government could balance three things. That's a fixed exchange rate, fixed capital flows, and independent monetary policy. And it seems like President Trump kind of wants to have all three of them. You've heard him harp in the past few weeks about the idea that, the ECB is easing rates, or China is pursuing easier policy because they're trying to devalue their currencies, which will make it more expensive for the U.S. to export its goods. That in itself hurts the Trump base because, his whole point of, his whole campaign of making America great again, so to speak, was to boost U.S. exports, to bring manufacturing jobs back to the United States. So if the dollar is getting stronger, then that hurts, the ability to get exports out to other countries. Now, the only thing is that those exchange rates are kind of in tune to whatever the Federal Reserve is doing. If the Fed raises interest rates while the rest of the world is lowering interest rates, that makes it more attractive for money to flow into the United States, which makes the U.S. dollar stronger. Without getting into all the economics of it, it's the Fed that has the lever here. So unless President Trump can get the Fed to do that, this is all a moot point. Oh, I want a weaker dollar. Well, you're not going to get it unless the Federal Reserve moves. So that's why you hear him speak so much about, hey, I need the Federal Reserve to lower rates, because that's the only way that he's going to get that weaker dollar that he really wants.
And that's why the independence at the Fed is so important, and that's why I think it's going to be very key to hear from Jerome Powell when he does address Congress in his testimony Wednesday and Thursday later this week. But that's kind of, it's a beautiful outlay right there, my friend. That was like an economic textbook we just heard right there.
Next topic.
Got to bring back Cheung shoes. All right.